Have you been denied for an FHA loan in the past due to your student loan debt hindering your ability to qualify? Well, I got some good news for you. Tune into this episode and take a look. Hey guys, my name's Ian Moore. Welcome to another episode of More About Mortgages. I'm a loan officer here at Premier Mortgage Lending. Today we're going to be jumping right in to student loan debt in regards to FHA loans and qualifying for a mortgage. So with Federal Housing Administration or FHA loans, the standard rule of thumb has been that if you have student loan debt that is in deferment or currently does not have a monthly payment associated to it, it is 1% of that outstanding balance needed to be used as a monthly payment towards qualifying. Therefore, if you have a deferred student loan debt of $10,000 and $10,000 and $20,000, so $40,000 total, but through 3 different accounts, you're going to be paying on that $10,000 $100 a month. On that $10,000 second account, $100 a month. And then on that $20,000 third account, you're going to be paying $200 a month. So at the end of the day, you're going to be looking at $400 a month in student loan debt. And that's typically what I see on credit reports a lot, guys, is people will have different student loan grants and loans through other companies and different agencies. So it's not typically one balance unless they've refied it in the past and have taken all their student loan debt and wrapped it into one account. Those are actually the worst cases, guys, because to be honest, when it's one balance like that, think about it. I mean, you have a student loan debt of $80,000. If it's separated into smaller loans and grants, that's easy because we can use the smaller monthly payments. As an $80,000 account, you're looking at $800 a month needed to be used towards qualifying if it's in deferment. That's a ton of money towards qualifying when you likely don't pay anywhere near that every month. So that's been a huge hindrance for home buyers here and homeowners looking to refinance and get, save money, get into a more affordable payment for the last couple of years, because 1% of the outstanding balance can be substantial in a lot of cases, guys. Today I'm going to make a huge announcement here that the FHA, starting in September of this year, so not right now, but starting in September, the FHA has lowered that requirement from 1% of the outstanding loan balance for student loan debt to 0.5%, which is awesome. That is going to create a window of opportunity for many people to qualify that weren't able to qualify previously because of their student loan debt, which the government has finally realized that is a ridiculous method for qualifying applicants to buy homes, because at the end of the day, people are going to pay their student loan debt in smaller increments. That's just a proven fact of nature. People don't massively pay huge chunks of their student loans at a time unless they're in a unique situation. Typically, they're paid incrementally in smaller amounts over time, which aren't going to necessarily make or break somebody's ability to pay their mortgage. In fact, it'll be more affected by their car payments, credit card debt, other debt that they have, maybe second mortgages, home equity lines of credit, personal loans, things like that, not necessarily student loans. Anyway, getting off topic here, student loan debt, guys, if you have some student loan debt and have previously been denied for a home loan, let's take a look at it and see what you qualify for now. Heck, you might even be able to get into a conventional loan, which in this market is a far better option for you to buy with than an FHA loan. But if we need to get you into that FHA loan, just know that you may qualify now and have more buying power with that 0.5% monthly payment towards your student loans instead of that full 1%. So keep in mind, guys, this is only for the student loan accounts that are in deferment and do not currently have a monthly payment associated to the balance. So if the loan is in deferment, you haven't been making it, this is where this rule applies. 1% right now with FHA, going down in September to 0.5%. However, if your credit report shows that your student loans are not in deferment, that there's a monthly payment associated to the account, that you've been making that monthly payment somewhat timely, then that is the monthly payment used towards qualifying. No ifs, ands, or buts, 100%, that's the monthly payment used towards qualifying. However, if it's in deferment, that's when we apply this rule. For example's sake, because I see it all the time, I wanted to provide you guys with this little example here. Say I run somebody's credit report and at the end of the day, it shows a $50,000 student loan account. What I would do right now, if I had to, if their credit score called for it, I would ultimately apply $500 towards their monthly payment on that student loan account, which will significantly impact their debt to income ratio and their qualifying ability and ultimately their buying power. However, starting in September, that $500 a month I can now drop to 250, which opens up a lot of room with debt to income ratio, guys, because $250 a month, depending on the purchase price and the amount of debt that that individual has or that couple has, $250 can open up quite a bit of room on the debt to income ratio and qualifying ratio scale. So it could make or break somebody's purchasing power. So if you have student loan debt, guys, you've been denied a loan in the past or not, you can just know you have student loan debts and you are a renter. Let's look at what you qualify for, guys, because there's a lot of opportunity for you out there. And starting in September, your debt to income ratio and qualifying ratio will be a lot more appealing and lower than it would be today. So keep in mind, starting in September, FHA loans, 0.5% towards the student loan payment, no longer a full percent. Give me a call to take advantage of it, guys, and have a great week.